Japan Exchange Group is aiming at 2027 crypto ETFs, but current law still makes the target conditional. This version of the story is about the legal gate. Without reclassification, the exchange cannot simply list crypto funds. JPX operates the Tokyo Stock Exchange and Osaka Exchange, and its target depends on reforms being discussed through Japan's Financial Services Agency process. The useful distinction is that a planning window is not a listing approval, a product term sheet, or confirmed asset coverage. The immediate pressure is that the plan depends on FSA and legal reform. The reason this deserves attention is that current law blocks simple ETF packaging. Read the event through this lens. JPX has a 2027 crypto ETF target, not approval. The confirmed baseline is that JPX has identified 2027 as a target year for crypto ETF availability. No specific ETF assets, fund structures, or listing details have been publicly confirmed. Japan's current framework generally places most crypto assets under the Payment Services Act rather than the Financial Instruments and Exchange Act. That distinction has historically blocked crypto from being packaged into traditional exchange-traded fund products. Those facts put most crypto sits under the Payment Services Act. Beside fIEA treatment is needed for ETF structures. That baseline keeps the segment grounded before the mechanism takes over. The factual floor is Japan's framework must shift before crypto ETFs can list. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is legal classification. If certain digital assets move under the fIEA framework, they can fit the securities structure needed for exchange-listed funds. In plain English, the exchange needs crypto to be legally treated in a way that supports ETF wrappers. Japan Exchange Group matters here because exchange demand cannot bypass the rulebook. The FSA reform process controls the next step. The operating detail is that securities-style rules support exchange-listed funds. While without reform, JPX cannot list the products. That is the part viewers need before judging the headline. The mechanism stays concrete because reclassification can make ETF wrappers legally possible. The affected side is Japanese retail and institutional investors who want familiar market access without direct token handling. A listed ETF could open a regulated channel through existing exchange infrastructure. But it would also bring crypto exposure under traditional financial oversight, reporting, and product standards. That makes the opportunity meaningful, but only after the rules, asset scope, and listing requirements are finalized. The practical effect lands on Japanese retail and institutions because the channel would use existing exchange infrastructure. The secondary read is that product standards would be stricter than direct trading. The effect is not abstract. Japanese retail and institutions could gain familiar regulated crypto access. The unresolved piece is the final FSA reform package. The 2027 date assumes legislative and regulatory changes happen within that timeframe. The useful proof will be finalized amendments, product filings, and confirmed asset coverage from issuers. The target should not be treated as proof that a Bitcoin or broader crypto ETF is already cleared. The clean split is that the target year is public, while final FSA reform still needs evidence. The unsupported leap would be this: a 2027 goal is not a launch approval. The clarification needed is final amendments and filings will clarify the path. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is the FSA's final approach to digital asset classification. For Japan Exchange Group, the key watch item is whether proposed amendments bring crypto assets into the fIEA path needed for ETFs. After that, product design, issuer filings, and exchange listing standards can finally become concrete. Until reform is finished, the 2027 plan is a regulatory horizon, not a launch promise. The decisive test is watch fIEA amendment progress. That matters because legal status decides ETF viability. The next stage should be judged by FSA classification decision, not by guesses.